Joining us now is Bob Dahl, CEO and CIO at Crossmark Global Investments. Bob, great to see you.
Good to see you, Mike.
How are you thinking about the market economy interplay into this Fed decision?
Look, I think we're in a high-risk bull market. Words chosen carefully. Bull market, path of least resistance is higher. When the Fed's cutting rates and earnings estimates are going up, stocks almost never go down. Right. That's the bull part. Got to be invested. You know what the other side is, the high risk part. It's the speculation that's taking place, it's valuation, et cetera, et cetera. So I think volatility is going to be there. In terms of the Fed, boy, from 80% chance to 30% chance up to 90% chance, it's kind of like nobody knows. It seems like they will lower rates. And what will be more interesting, as Sarah's already said, is what the presser sounds like afterwards. What does the chair say about these two mandates?
I mean, you know, on one level, you can sort of say, like, why aren't we just kind of hustling down to neutral, right? I think a lot of the doves are saying that. And, you know, the underlying disinflation, maybe that's going to come to bear next year. On the other, you know, the Fed has rarely cut 175 basis points in 15 months, as it will have done by Wednesday, without a recession really in sight. So it's kind of a tricky moment.
It's bizarre that the 175 against no recession. I agree. And look, I think at some point, no time soon, they're going to have to give up on a 2% target for inflation. It's just not practical in the environment we find ourselves. They're stuck on the fact that we had it for like almost a decade, not that long ago. But the demographics, the technology, the globalization all argue the number's closer to 3. I don't know how they climb down on that one, but at some point I think they will.
That is going to be for the next Fed chair. I don't think there's any way Fed Chair Powell climbed off of a 2% inflation target, especially when they were, you know, they were late. They thought it was transient, you know, transitory, the inflation problem, and then they were late on this. So, Bob, what are your expectations for how many cuts we get next year at this point?
Yeah, very few, in my view. I think the economy is going to be just fine. I think inflation is going to stay stubborn at, call it 2.8, which is nowhere close to 2. Nowhere close to 2.
It's kind of close to 2.
You know, if you can you get to 2.4 and round it down to 2? I guess. But one Fed governor early last year said, I didn't say 2, I said 2.0. So, you know, they've dug in hard on this.
I mean, it's not really close to 2, but it's also pretty close to the average of the last 30-something years.
That's what I mean, yeah.
That's why 2's not the right target.
Yeah. And so in terms of, you know, the stock market and how it's positioned here, we've gone through these phases of, you know, overshoot on reliance on Mag 7 AI and then rethink it a little bit. You're having one of these phases where non-tech sectors or cyclicals kind of working. Does that continue? Is that just like an interim move? How do you think about it?
I think for now it does. I think we're going to have all kinds of rotations into next year. The Mag 7 will come on for a while, then the 493 will show up, and there's going to be a lot of rotation. We've had bouts of well over 20 for the VIX this year. I think we'll see more of that next year as people say, I'm not sure what to do.